Bloomberg Audio Studios. Podcasts, radio, news.
The Stock Movers Report, your roundup of companies making moves in the stock market, harnessing the power of Bloomberg data.
Let's take a look at some stocks on the move today. I'm Nathan Hager, joined by Bloomberg's Valerie Teitel, starting with a stock that is moving way to the south, following some headlines out of China. Give us the update on Qualcomm this morning. Good morning, Val.
Hey, good morning, Nathan. Happy Friday. Qualcomm shares are down over 2.5% so far in pre-market trade. This comes as China has started an antitrust investigation into the company. Now, this is a latest in the string of tit-for-tat moves between Xi and Trump as they jockey for leverage before their key meeting later this month to discuss trade. But it is affecting Qualcomm shares this morning. And that is because Qualcomm, they get a majority of their revenue from China. Around 65% of their revenue from the last fiscal year came from China. It also makes up a majority of their sales as well. So it does pose some issues for Qualcomm if perhaps the Chinese government, the Chinese regulator, do cast an eye on them in a negative way. But it does follow a similar move from China that they made against NVIDIA a month or so ago that was largely shrugged off by shares of NVIDIA, but Qualcomm shares are in the red, down 2.6%.
Yeah, certainly bears watching as we get closer to that key meeting at the end of the month. The broader market this morning, Valerie, might show a little bit of fatigue around the AI trade, but we are certainly seeing it still in the most the biggest gainer on the tape this morning, Applied Digital.
Applied Digital up 22% in the pre-market trade. Okay, this comes after earnings where their revenue did beat estimates, but they also had some positive details about expanding a lease agreement with CoreWeave for additional compute. So they're in advanced discussions to do that with the hyperscaler to build and focus on a data center campus in North Dakota. Applied Digital is a company that creates equipment for manufacturing semiconductors and has also been involved in the data center build out. So these shares are rising higher on the back of these earnings announcement, up 22% in pre-market trade.
Another stock moving after earnings, distressed for Levi Strauss.
Levi shares down nearly 7%. Now, for Levi, this comes despite raising its full year outlook, despite saying that sales are going to look good into the holiday season. Essentially, the market is really hanging on at some sentiment around tariffs. They warned that tariffs are starting to bite. Now, while in the previous quarter, they were still able to raise prices, consumers were still buying. So margins did seem okay in the previous quarters. It does seem like there might be some skepticism over whether their margins will stay stable heading into the holiday season, given that tariff warning. They did pencil in an upgrade when it came to their tariff, what they're essentially penciling in for tariffs for the rest of the world ex-China. That was buffed up to 20%. So some concern around the tariff warning for Levi.
And just quickly, another company that's been speculated about being a potential U.S. government target is still catching a bid?
Yeah, this all goes back to the rare earth situation, the jockeying for power between U.S. and China on rare earths. Critical metals is up 11% in pre-market trade. It's risen 80% so far this week, and that is on speculation that perhaps it could be the next company that the U.S. government takes an equity stake in. Remember, the U.S. government is doing this in order to try to get leverage over China, which is very, very dominant in the critical metals mining space.
The Stock Movers Report from Bloomberg Radio. Check back with us throughout the day for the latest roundup of companies making news on Wall Street. And for the latest market-moving headlines, listen to Bloomberg Radio live. Catch us on YouTube, Bloomberg.com, and on Apple CarPlay and Android Auto with the Bloomberg Business app.